Let's bring in Kevin Green, senior markets correspondent, right away to help set up the action today and make sense of it all. All right, KG, I didn't expect us to, I think, start as weak as we were because I saw like the initial reaction, as I recall, to Alphabet Google seemed to be positive. But before we dive into that, let's get your big picture take on markets and where they stand now.
Yeah, we continue to see a lot of pressure when it comes to the technology stocks as well as communications services. Obviously, Google's earnings yesterday, we are seeing a little bit of pressure on those shares. But if you kind of take a little bit of a step back, Diane, you are still seeing a very strong rotation or this broadening out. In fact, the dividend stocks, if you're looking at the SPY dividend ETF, actually advanced over 2% yesterday and is getting fairly close to an all-time high. And so you are still seeing some sectors really outperform. Now, they are defensive in nature, but you could also make the case that they have been kind of lagging this market over the last year and a half or so, and now we are seeing a little bit of a catch-up. In fact, if you're kind of looking at Microsoft, it continues to move to the downside, getting very close to that $400 level, kind of closing a gap, and you are seeing maybe Nvidia getting a little bit of pressure to the downside as well, breaking the 180 level yesterday. 170 has to hold. If it does not, then you start seeing a little bit more of a rollover from a technical standpoint. So I still think this is a stock picker's market. Volatility actually inched up to around 20, but what's concerning about the volatility complex, Diane, is we are not seeing any type of backwardation or near-term fear that's being priced in, and really kind of the longer duration VIX futures kind of saying that everything's going to be in the all clear. Volatility is all rising at the same type of level, so we still have a normalization of that curve, and I don't think that we're going to be done with this volatility until you see that backwardation take place or a 2 standard deviation move for the VIX just itself. So I would say we still have some turbulence ahead here, and we'll see how the market kind of fares out, but the defensive trade has been the one that has been very profitable for a lot of traders and investors lately.
All right, let's get into those numbers from Alphabet Google. I know you broke the numbers yesterday, and if I recall right, and you correct me, there did seem to be a positive reaction initially, but as the hours pass on, it seems like the market doesn't love what's happening with regard to capex. Take us through what some of your takeaways are.
Yeah, I think the initial reaction was a little bit mixed, not only because of that capex number, but I think a lot of us were trying to figure out, is the estimate that these analysts actually had for capex correct, or did we just see maybe an error or a typo? And it is correct, and so we are seeing the move to the downside here. Revenue came in at $113.8 billion. Street was looking for $111.4 billion, and the adjusted earnings per share came in at $2.82, beating the Street's expectations of $2.58. Google Cloud, once again, exceeded the Street's expectations here by over $1 billion, actually. So that's actually a very good sign for this company. They continue to bring on new customers, and they are seeing demand within that segment. That's actually looking at around a 48% growth year over year when you're looking at Google Cloud revenue alone. Now, YouTube ads did come in a little bit short. That came in at $11.38 billion. She was looking for $11.84 billion, but we're going to talk about that capex spend. They did re-rate that aggressively higher, and they plan on actually doubling 2026 capex to $175 billion to $185 billion. That's up sharply from what the market was expecting here. The market was actually expecting $115 billion here. So they are spending a lot more money when it comes to the AI build-out, especially when you're looking at Google Deepmind. They do believe that that's going to be the long-term play for this name, and I think the market's really trying to digest it. Now, this pullback's not that aggressive, right? I mean, we're down, what, 4%, 5% or so. It's still close to the all-time highs, but the capex spend is going to be a tailwind for some of these companies within the semiconductor space, but maybe a headwind for a name like Alphabet, which once again is kind of ramping up and doubling down on their ambitions regarding artificial intelligence.
Okay, it's interesting to watch some of the gyrations and reaction. Broadcom is still higher off the back of the results because obviously they would benefit from the spending. Nvidia has been fluctuating. It was higher earlier. Now it's under a little bit of pressure. What's your read through on that?
Yeah, I think Nvidia, the market's really kind of just de-risking right now when it comes to tax. So you are seeing that kind of break to the downside here, and we are going to be leading up to earnings over the next couple of weeks. And usually Nvidia doesn't actually perform that well post-earnings. So I think that's really kind of the reaction there. And when you're coming to Broadcom, I think that's a little bit more of a different story because Broadcom is the one that builds out their TPUs or manufacturers or fabs, their TPUs. And so if their capex spend is going to move to the upside, and obviously they're doubling down on artificial intelligence, demand for TPUs should also align with that as well, which will be a tailwind for Broadcom over the next couple of quarters, and if not the rest of this year, for that matter. So that's why you are seeing some of that positivity within that name.
All right, let's talk Qualcomm. That's been under some pressure off the back of its results, and it's obviously not so much about the trailing quarter, but what's to come. What's your take?
Yeah, we did see weak guidance when it came to Qualcomm. Stock's down about 11.5%, almost 12% at this point in time. Now, revenue did exceed the street's expectations, coming in at $12.25 billion. Street was looking for $12.2 billion. And the adjusted earnings per share coming in at $3.50. Street was looking for around $3.39. Now, they actually did see an uptick within their QCT automotive business that actually had revenue topping $1.1 billion. That's actually a bright sign in some respects because we have seen some weakness within that segment over the last couple of years, and maybe that trajectory is going to change. But their guidance moving forward is where we are seeing a lot of the weakness. They are looking at Q2 guidance between 10.2 billion to 11 billion. Street was looking for 11.1 billion, and the adjusted earnings per share estimate between $2.45 and $2.65. Street was looking for $2.89. You are seeing a reduction within the guidance, not only top line, bottom line, because of the memory chip shortage. And it's not only just the prices moving higher, which is going to eat into their margins, and they kind of talked about that on the conference call, is the fact that they're not even able to obtain these chips. So that's going to have an impact, especially on their smartphone business, not only for Apple, but also for Android, which is really kind of the bread and butter for this company. And they also are building out the GPU space as well. Now, the GPU side of their business, the CEO is stating that that is not going to be impacted by the memory shortage. Completely two different type of segments here. But the big driver for their revenue obviously will have an impact. Now, at the end of the day, Diane, are we not going to see maybe revenue living up to the expectations for next quarter? That could be the case, but they do control a significant amount of the market, so maybe the revenue is going to be delayed down the road when it comes to trying to recoup some of the chips that they are not able to receive right now. And this happens within the chip segment. It's a very commoditized business. We have gluts, we have shortages. 2 years ago, a year and a half ago, we had a significant glut within memory. Now we do not. And so eventually it will figure itself out. It just depends on when.
Yeah, and investors are selling first and asking questions later for Qualcomm. Let's get into the bleeding in Bitcoin. You've got this crypto downdraft continuing. What's your take here?
Yeah, we are breaking some key areas of support here, Diane. The last one that we were kind of focusing on was around that 75,000 level. We did break below the 70,000 level right now. And if you're kind of looking at a chart, and I got to bring it back to a weekly just to get a good gauge here. If you're looking at another area of support, if we break the 70,000 level, you're starting to look at around the 53, 54,000 level. So you are seeing more de-risking in this market. This is a liquidity grab. You're seeing it across multiple asset classes, not only in cryptocurrencies, which obviously that's been taking place for a fairly long time here in market terms at least, but you're seeing the same when it comes to the metals complex and other commodities that are out there. High beta tech is also getting hit, so we are seeing maybe a little bit of a sell-off, maybe a little bit more of a capital raise situation taking place here. And then last but not least, dollar is also strengthening. And so when we have a strengthening dollar, a lot of these commodities, and I will include crypto and Bitcoin in this, could also see some weakness as well. So not a really good look. Hopefully it's able to recover today, but if not, once again, the trend looks like it wants to go down to around $55,000, $54,000.
Okay, and let's get into levels you're watching out for today on the S&P 500 to the downside and upside.
Yeah, very wide range, so be mindful of that. To the downside, 67.50. To the upside, 69.30. Once again, we have about a 20 VIX, so we're implying around a 1.3% move to the upside or downside, Diane. It's definitely heavily skewed to the downside, so be prepared for a lot of volatility in this market today.
Okay, keep your head on a swivel, as you say. All right, that's KG, Kevin Green, our senior markets correspondent.